So while we await an actual decision, our next guest has a look at what the three scenarios, an extension, a compromise, or a default, would all mean for the REITs. Yes, the REITs. Joining me now is Ron Kamdem. He's head of US REITs and commercial real estate strategy at Morgan Stanley. Ron, it's good to see you again.
Great. Thanks for having me.
A lot of people might not realize there's a REITs angle here to the debt ceiling. So talk to us, if we get a default, let's just start with the most severe scenario, what would that imply?
Yeah, it's a really interesting thought topic here because at the end of the day, the good news is that out of 160 REITs in the index, there's probably less than 10% that actually have direct exposure to the government. And if you have a scenario where you have a default, we think you could see consumer spending go down somewhere in the 10% plus range. And if you think about consumer spending going down, that impacts really the lower quality retail and the lodging REITs that are directly exposed to that.
Right.
That avenue.
Right. And am I correct that, Well, Peak, DHC, I mean, are these some of the names you're talking about? Just explain that.
Yeah, sure. So the direct exposure in the REIT space to the government comes in two forms. The first are some of the office REITs that have government agencies as tenants. And the second, to your point, is some of the healthcare REIT that have exposure to skilled nursing facilities. So a lot of skilled nursing facilities rely on Medicare and Medicaid payments for reimbursements. So Well, Peak, and Ventas all have some exposure, but the biggest exposure to skilled nursing are going to be names like OHI, Omega, NHI, National Health, and CTRE. Those are the names that have the biggest sort of exposure to that sector.
Yeah, and maybe the way to turn this all on its head, because the markets are in a good mood today, is to say, okay, so if a deal's reached, then maybe all those areas should flourish. Under the scenario of a deal or a compromise, what is the play for REITs that you envision?
Yeah, it's a really good question. I think you're precisely right that the sectors that have faced the biggest overhang on this news will be the ones that would see the relief rally. And then some of the sectors, some of the defensive sectors, like the triple net REIT space that have sort of outperformed prior to this, would be the one to get left behind.
And then, of course, we have the kicking the can scenario. And that kind of brings us into a situation where maybe a mix of all the angles that you already described. But then it also kind of puts just fundamental questions about office back to the fore. I mean, that's the biggest worry spot, unless the retail gets worse in a big way quickly for REITs. Would you say that trumps anything that could happen out of Washington? That in some ways Elon Musk's comments are more important if we start to see people really called back to the office in a big way?
Yeah, I think that's right. I think the kicking the can scenario is a difficult one because you have this significant overhang weighing on the REIT space and on businesses. And when you think about how long that could go for, it can certainly impact leasing activity. It could certainly impact business decisions, and that could create a little bit of an air pocket for the REITs. What's important also is the context, right? This is happening at a time where the REITs are already facing financing headwinds as conditions tighten. So to add this fundamental headwind on top of the financing could be quite challenging for the sector.
All right, Ron, thank you for your time today. It's good to check in with you again.